China buying more U.S. ag products on Tuesday, purchasing 9.7 million bushels of soybeans and more than 8 million bushels of soft red winter wheat. But it wasn't enough to push soybeans forward. Michelle Rook is back with more in Markets Now.
Well, a mostly lower day in markets on Tuesday, with the exception of wheat. Chip Nellinger, Reef Agri-Marketing, joining us. And Chip, it felt like a risk-off day for sure.
It was very much risk-off. This dollar index has really been strong here recently. Just screaming through 104, 105, 106, marking our way up towards 107. And that really has all been from about 2 weeks ago when the Federal Reserve said we're going to keep these interest rates higher for longer than what the market expected. Interest rates have shot through the roof. Treasury bonds and note futures really imploded. That's kept the dollar strong. Now the equity markets are starting to roll over, and that really has kind of created a risk off for all commodities, especially our grain and livestock markets. Now, the funds were short corn and wheat already in large amounts. They were long beans. And so, I think what that means is you're seeing heavier selling in the beans, less so in the corn and the wheat. And it's kind of creating this environment that looks like corn and wheat are trying to bottom, and it looks like beans might have another dollar to go to the downside here.
And is that harvest pressure, concerns about the river, or what? Or technical selling, like you mentioned, though?
Yeah, absolutely. I think the Mississippi River issue is a big part of this, right at the worst time of the fall, pretty much the gut slot of bean harvest. Eastern Corn Belt yields are pretty good as well. And so you combine this, poor river basis, not really poor river basis. It's just simply the fact that we can't get them all down the Mississippi River. And you add that to the risk off and the fact that the funds are long and needing to run for the exits. And it's really been an ugly couple of weeks in the bean market here.
Yeah. In addition, we also got some China SRW wheat business that helped to kind of lift the corn and wheat market, it looked like, on Tuesday.
Yeah, kind of came out of the blue, right? They're supposed to be on holiday. We had an announcement on Monday. Of course, that could have been on Friday before their holiday. And now today it comes out, they're buying beans and wheat. Certainly something that you really want to look towards and say, all right, maybe the wheat market has gone low enough for the time being. If China's coming in to buy it, maybe that could mark a significant low in here. What
about corn? Is the harvest low in there too?
I've thought for a couple of weeks it has been. Unfortunately, if beans do have 60, 80 cents, $1 lower to go, that's going to keep a little bit of pressure on corn. But to me, the corn market acts like we've seen the low. The calendar tells you that we've seen the low already. Now we just need the market action to confirm it. We need wheat to stop going lower, and I think that can be the case.
Thanks for joining us, Chip Nellinger of Reef Agri-Marketing. That's Markets Now. We'll have more AgDay coming up.
Farming has changed. Markets are riskier than ever. For customized, focused commodity marketing, contact Chip Nellinger or Adam Dreyer at 309-550-7213.